current state of the housing market is complex, with rising interest rates affecting home equity in significant ways. Research shows that these changes can impact mortgage payments, refinancing options, and the overall value of homes. According to the Federal Reserve Survey, the current 30-year mortgage rate is approximately 6.8%, and the 15-year mortgage rate is around 6.1% for a household considering purchasing a home. These rates can mean the difference between affordability and unaffordability. Data indicates that closing costs, which can range from 2-5% of the loan amount, and PMI thresholds, which kick in at loan-to-value ratios above 80%, are also critical factors to consider. The national median home price for 2024 is $420,000, but this number can vary significantly by region. For example, in some areas, the median home price might be as low as $280,000, while in others it could be as high as $600,000 or more. Understanding these regional differences and how they interact with rising interest rates is essential for making informed decisions about home buying or refinancing. We analyze data from public lender disclosures and HUD, providing insights into the current market trends and what they mean for your wealth. Consider a scenario where a homeowner is looking to refinance their current mortgage. With the current interest rates, they might find that refinancing is not as beneficial as it would have been with lower rates. The IRS publication confirms that while mortgage interest deductibility can still provide tax benefits, the rising rates mean borrowers will pay more in interest over the life of the loan. Studies suggest that homeowners should carefully review their financial situation and consider the potential for future rate changes when deciding on their mortgage strategy. This video will delve into specific scenarios, such as the impact on first-time buyers and the differences in mortgage options, including fixed-rate and adjustable-rate loans. Our analysis will also cover down payment strategies and the effects of rising interest rates on home refinancing. For smart buyers, understanding these dynamics is key to making informed decisions, whether you're a seasoned homeowner or a first-time buyer. The shifting landscape of interest rates and home equity requires careful consideration. The research shows that being educated on these topics can save you money and secure your financial future. If you're looking to navigate the complex world of mortgages and home buying, this video will provide you with the insights you need. By examining real mortgage rate ranges, specific closing cost percentages, and PMI thresholds, we'll explore how these factors influence home equity. For instance, imagine a scenario where a homeowner decides to purchase a home with a 20% down payment. With the current 30-year mortgage rate at 6.8%, their monthly mortgage payment would be significantly higher compared to the rates seen in previous years. According to BLS data, the economy's current state and the housing market's trends play a significant role in these decisions. Per IRS 2024 guidelines, tax implications for homeowners are also an essential aspect to consider. We'll discuss how these factors can affect your financial situation and what you can do to navigate the current market successfully. The key to making informed decisions is understanding the current landscape of interest rates and how they impact home equity. By the end of this video, you'll have a comprehensive understanding of the topic and be better equipped to make decisions about your own financial situation. One of the most critical aspects of the current housing market is the impact of rising interest rates on mortgage payments. With rates increasing, the monthly payments for homeowners will also rise, affecting their ability to afford their homes. Research indicates that for every 1% increase in interest rates, the monthly payment on a $300,000 mortgage can increase by approximately $150. This change can be significant for households with tight budgets, making it essential to consider these factors when deciding on a mortgage. Furthermore, the effects of rising interest rates on refinancing options should also be considered. Homeowners who are looking to refinance their current mortgages may find that the current interest rates are not as favorable as they would have been with lower rates. The decision to refinance should be based on a thorough analysis of the current market conditions and the potential benefits and drawbacks of refinancing. In addition to the impact on mortgage payments and refinancing options, rising interest rates also affect the overall value of homes. As interest rates increase, the demand for homes may decrease, leading to a slower increase in home values. According to the National Association of Realtors, the current median home price is $420,000, but this number can vary significantly depending on the region and local market conditions. Understanding these dynamics is crucial for both homeowners and potential buyers, as it can affect their decisions regarding purchasing, selling, or refinancing a home. The current state of the housing market is complex, and navigating it requires careful consideration of various factors, including rising interest rates, mortgage payments, refinancing options, and home values. By educating yourself on these topics, you can make informed decisions that will benefit your financial situation in the long run. To illustrate this point, let's consider a case study. Suppose we have a homeowner who purchased a home in 2020 with a 30-year mortgage at a 3.5% interest rate. At the time, their monthly mortgage payment was approximately $1,400. However, with the current interest rates, if they were to refinance their mortgage, their new monthly payment could be closer to $1,800. This increase in monthly payment can be a significant burden for many households, highlighting the importance of carefully considering the impact of rising interest rates on mortgage payments. Another critical aspect to consider is the impact of rising interest rates on first-time homebuyers. For many first-time buyers, the dream of homeownership can seem daunting, especially with rising interest rates. However, there are still options available for those looking to purchase their first home. One strategy is to consider an adjustable-rate mortgage, which can offer lower monthly payments in the short term. However, it's essential to carefully weigh the potential risks and benefits of an adjustable-rate mortgage, as the interest rate can increase over time. In addition to mortgage options, first-time homebuyers should also consider down payment strategies. While a 20% down payment is often recommended, it's not always necessary. Some mortgage options, such as FHA loans, allow for down payments as low as 3–5%. However, it's essential to consider the potential pros and cons of a lower down payment, including the need for private mortgage insurance (PMI). To navigate the complex world of mortgages and home buying, it's essential to stay informed about current market trends and conditions. According to a report by the Mortgage Bankers Association, the current housing market is expected to continue to evolve in response to rising interest rates. The report notes that while rising interest rates can make it more challenging for buyers to afford homes, they can also lead to a decrease in housing prices, making homes more affordable for some buyers. In conclusion, the impact of rising interest rates on home equity is a topic that requires careful consideration. By understanding the current landscape of interest rates and how they affect mortgage payments, refinancing options, and home values, you can navigate the complex world of mortgages and home buying successfully. Remember, smart buyers ask the right questions, keep asking. If you're looking to purchase a home or refinance your current mortgage, it's essential to consider the potential impact of rising interest rates. By educating yourself on the current market trends and conditions, you can make informed decisions that will benefit your financial situation in the long run. Don't forget to subscribe to our channel for more videos on personal finance and home buying. In our next video, we'll be covering the topic of down payment strategies for first-time buyers. We'll explore the pros and cons of different down payment options and